Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your 1 p.m. market update for Wednesday, the 16th of November. You know, tonight is the night we broadcast our 1-hour show on the markets. This is when we take your questions and calls, so be sure to watch MarketClub TV tonight at 5 p.m. Eastern Standard Time. If you're not at your computer, you can certainly watch it a little later as we rebroadcast this on demand. Call us at 410-867-2100, extension 129, and leave a question for the show. You can also email us with your questions at marketclubtv@ino.com, and we will do our best to answer your questions on tonight's show, so be sure to watch. You know, there's a bigger problem than contagion. It's the human problem. You know, I was thinking about this last night, and there isn't anyone I know that has the slightest clue what's going on. What I mean by that, and all due respect to some very smart people, no one who is living today has lived through the type of problems we have right now in Europe. So far, it's all about changing the governments in Italy and Greece. That's all well and good, but the reality is the performance benchmarks and austerity measures they need to put in place present a huge challenge for the population of those countries. Ask yourself this. I want you to give up 20% of everything you have overnight, right now. Would you be happy with that? Of course not. Nobody would. But that's exactly what is going to be the big problem in the future. I call it the human equation. You know, Monti, now the technocrat in charge of Italy, probably knows what he has to do, but the implementation and acceptance of that is totally a different matter. What really concerns me, and I think a great many other folks, is the last time we had a situation like this, it took a major war to get us out of it. I sincerely hope that's not the case this time. In fact, it was the Chancellor of Germany, Angela Merkel, who first talked about war last week. Unbelievable. We just never learn. There are no victors in war, only losers. You know, the one big takeaway from all of this is a solid proof that socialism does not work and never will work. On February 5th, 1976, Prime Minister Thatcher said the socialist government traditionally do make a financial mess. They, the socialists, always run out of other people's money. It's quite a characteristic of them. I think Margaret Thatcher was right on the money on that one. You cannot keep giving away more and more benefits to people who do not want to work. The math just doesn't add up. So when we point the finger at Europe, we have three fingers pointing back at ourselves in the path we are currently on. You cannot have half the people in this country not paying any taxes. It just doesn't work. Social Security was never about the retirement program. It was set up to help with retirement, but not be the sole provider of financial help. And there's absolutely no help from Washington, D.C. in terms of ethics or integrity. When you have people in elected offices who are able to trade legally on insider information, you know something is very wrong. Becoming an elected official should not be about how you can stuff your pockets full of money and have a job for life. It should be about doing what's right for the country. Okay, now that I got that off my chest, let's go look at how the markets and how we can create and maintain your wealth in 2011. So be sure to check out tonight's show. You can call us with your questions, 410-867-2100, extension 129, or email us at marketclubtv@ino.com. Love to hear from you. So let's go to our homepage, and we're going to go right to the portfolios, and we'll do that right now. So here we are. We still have a lot of portfolios in this sort of minus 55, plus 55, plus 60. These are trading ranges. And in the silver, we have maybe an emerging market going down, not quite clear there, still bullish on gold. The copper market is still in a trading range. We have a plus 100 on the crude oil, which is a big step. We moved over $100 a barrel here today. You can see we're trading at 101.66. And we have a plus 90 on the dollar index and a plus 60 on the Reuters Jefferies index. Let's go first look at our market, and that's the S&P. You see how this market's getting tighter and tighter. And I'm going to close this up a little bit so you can get a better picture. It's getting tighter and tighter. And you could be, this is what potentially could be happening. And I'm just going to draw this trend line in here. So the trend line right here, and there's a trend line right here. This market is tightening up in a triangle formation, which could be a continuation pattern to the upside. Now, right now, you've got a couple of negatives there. You've got one, you're below the PSAR, which is the little dotted line right here, and you also have monthly and daily trade triangles presenting a problem for this market. It's plus 55, meaning it's a trading range. not out of this. We're tightening up, but we will be making a move out of here sooner or later. If we close below the low here, below, let's say, the 1240 level, we're currently trading around 1250, 1251, I would say we're probably going to see a push to the downside. The market is a little lower for the week, but not by much. But we are definitely getting ready for a move here, one way or another. Whether we're going to divorce ourselves totally from what's going on with Europe, I don't know. Or we're going to see things come out of Europe that really are even worse than we expect, and that'll push the market down worldwide, not just the S&P 500, but all the markets in Asia and also, of course, in Europe. So let's go on to our next market where we've got the Dow Jones. You can see it's a plus 55. We'll just go over this very quickly, but you can see what's happening there. Again, if we see a close, I think we start making new lows around below 11,950. I think we'll see a little more pressure coming into this market. Again, it's just very, very flat below the PSAR, which is the little dots above here. If we go above this, if we go above 12,200, then it's a different ball game. I think we'll see a challenge, obviously the recent highs, but the market generally is just, there's something not good about these markets right now, and I think you would have to agree if you've been following them pretty closely. Now we're looking at the composite, the NASDAQ composite. Again, very tight range. I mean, this is what's happening. We tend to open up big either way and sort of get sucked in for the rest of the day. But this market here that we've talked about, the 12,600 level, or 2,600 level, sorry, 2,600 level, and also about this 2,750 level. That's where the market's stuck right now. You could say 2,700 to 2,750, but certainly this market needs to get out of this range if it's going to go anywhere. So let's go to our next market, and this is silver. I mean, look, again, we are in a minus 75 now. What could be happening right now in silver, minus 75, once you get over 70, it means you potentially could be emerging into a negative trend. So it's still too early to say. Longer term, our monthly is negative, daily negative. Only the weekly is positive. That would change, I suspect, if we were to see this market move below probably the 32 level, which we have as a support area for this market. And if we were to move over there, under there, I think that would be a really a real challenge. 33.50 is also a support area. If we go below that area, then I think we'll see more pressure coming into this market. Again, you were overbought, you're coming into an oversold, you're just now starting to turn down on the MACD, the MACD. That's going to be very interesting to see where that closes today. So let's go to the bullish part of the metals complex, and that's gold. Still positive. We had a pullback. We also kicked into a PSAR, which means we had a sell signal on the PSAR. Well, it gave a negative signal. I shouldn't say necessarily a sell signal, but a negative signal. And you can see if we put our trade triangles in, we also had a signal right here a couple of days ago around the 1754 level, market to 1770. That was just an exit signal. The trend's still up. We want to be long in this market. We think it's going to make its highs in June of next year, May or June of next year. And we're looking for a good place to get long, to add to long positions. Again, longer-term traders are long from 1430. Intermediate-term traders are long from 1691. So the thing still looks very good. Only short-term traders should be on the sidelines right now, waiting for an opportunity to get back in. So lots going on there. Again, in the silver, gold, you see that we're just very close to tipping there. I want to stay in the positive mode there, but we may see this market come back. It's very strange markets right now. Not a lot of volume in these markets, and they're very, very erratic. Now, looking at copper. Copper is just still the same way. I think we had a signal today in copper, and no, actually we had a signal a couple of days ago, actually some time ago, and it really hasn't changed around. Still in this mode, negative mode. For the weeklies to go down, we have to see this market go below the 330 level. So that's, if we go there, we'll be in a full-blown bear market. Much like we pointed out Citibank yesterday is in a strong downtrend. That's a minus 100, and it's moving down, of course, today, and it was moved down yesterday. So quite a lot going on in the market. Again, you want to watch this market on the MACD. It's just sort of, we've gone through the line here, and I think that's still saying it's negative, but it's sort of flattening out. Really not a strong trend. And this is, if you go back here, you sort of really had no real strong moves, only this one for that brief period of time in late October to the end of October. That was just a very short move. So next market we're going to look at is going to be the crude oil market. This is the big news today, of course, trading over $100, popping up to as high as 102.29, currently trading at 101.40. Our monthly kicked in yesterday. You can see that kicked in at 99.77, so that was a good signal. Plus 100 means the trend is very strong, indicating higher levels. You can see where our weekly kicked in at 87 and our daily kicked in at 93. So all systems are go. It looks like it wants to go higher. However, we are out of the Donchian trade channel. We are probably very overbought, which we are, and everything's a go here. So it would look as though the trend's still very positive. I think pullbacks will probably be met with good support, but the $100 barrel is a big level, and the question is, what's that going to do to the economy? It's going to put gas prices up. For sure, you're going to have to pay more at the pump, because you remember we were trading back here at around 76 in early October, and here we are 6 weeks later. We're up some 20, 30% in crude oil prices. So that may present a problem for the economy. So let's take a look at our next market. Next market is the dollar index. Again, this market, we are bullish on this market. It moved up, actually closed. It moved as high as 78.39 today. We say if it closes over 78, it's just barely over that level now. I'd like to see it close over 78.20. If we can get that, I think we'll see this market really perform a little better. Certainly if we can close over the high, the opening range was 78.07. So we need to see a little more of a pop here. But generally speaking, we remain positive in this market. We popped out of the trade channel, Donchian trade channel. We are still positive here. So I think, generally speaking, we'll see this market do well. And we're also, of course, higher for the week. We closed last week down here, and that's around the 76 and change level. So we'll, I think it's going to go higher. So let's go to our next market. The last one is the CRB, Reuters Jefferies CRB index. And this is, again, this is just choppy, a little bit choppy. We had a signal yesterday that the short term was up. Of course, we popped up today. Not much going on there. It's a plus 60, meaning it's a trading range. Now, this is the big thing with this particular index, is this is going to reflect raw commodity prices. And if you scope this out further, you can see, let me just take some of these things off the charts, so make it simpler for everybody to look at these things. But if you see where we've been and where we are now, it's really kind of, you can get the idea. So we've had a huge move up. That was crude oil going to about 140, 145, and a huge crash down when things changed dramatically there. So we've come back up, and I think if we look at this in terms of just a Fibonacci level, if we click here, you can see the box comes in here, meaning it's a live box. So click here. That's the, that's going to be the trend line. Let's go to the Fibonacci. That's what we want. So here you can see we're pretty much right on the level here. This is a 61.8% level. We've pulled back, and I think that's the key. If we pull back, if we clear this off, close it up, and scope this out again, you see we pull back the 61.8%. So this level here, the 294 level, we mentioned that in our previous broadcasts, was a pullback of that magnitude. If we regroup here, I could see us starting to get into an inflationary environment with crude oil going higher and some of the other markets also reflecting demand and scarcity. So, hey, this is Adam Hewson. Be sure to watch our show tonight if you have a chance. We'd love to hear from you. So give us a call at 410-867-2100 extension 129 and leave a message with a question. We'll do our very best to answer it tonight. Also, you can email us at marketclubtv@ino.com. And if I don't see you tonight, I'll see you tomorrow at 1 o'clock, so be sure to tune in for that show. Hey, Adam Hewson, every success in trading, and have a great day.